Hey, good afternoon, ladies and gentlemen. My name is Alex Radford, and thank you for joining us today for another webinar with Shane Clark from EuroAmerican Financial Advisors. How are you, Shane?
Yeah, real good. Thanks for having me, Alex. Appreciate it.
Our pleasure, our pleasure. So, Shane, tell me, where are you based and what do you do?
So I'm based in Sevilla, and our company, EuroAmerican Financial Advisors, hopefully it kind of gives away what we do with the company name. We try to be pretty descriptive and
Yeah,
long. So we're investment advisors. We focus on helping U.S. expats who live in Spain, Portugal primarily, but also the rest of Western Europe and Greece. We look at the cross-border elements for what they need help on coming from the US, where we have citizenship-based taxation. Unlike any other country, it creates a lot of issues for them on the tax side. So starting with the tax side, we look at what complications they have for their finances, and we help them on their investment portfolios, creating financial plans, and then putting them in touch with anyone they need for their financial well-being, to make sure they avoid mistakes or costly problems.
yeah, that sounds good because, increasingly, I'm an English lawyer and a Spanish lawyer. I've been in Spain for 33 years plus, and we are increasingly seeing a lot more North Americans coming over,
Yes.
want to buy property, but also now to live.
Mhm.
I mean, I think you had an election there recently that might have had something, might have had an effect.
Did we?
Yeah,
Yes,
but
absolutely. That
but but
really was,
but
yeah.
but
Go ahead.
basically, I mean, it's been happening for years, and one of my one of the first Americans to land on the Costa del Sol was a chap called David Searle, and
Mhm.
he wrote a book called "You and the Law in Spain," which I kind of co-authored with him in the last edition. So if you haven't read that book, have a look at it on Amazon, and
Yeah, I'll check that out.
we'll check that. But today we're focusing on Americans coming over to Spain. Okay, now I suppose like from our point of view, we would always advise anyone moving to Spain that when you spend more than 183 days here between January and December, that you become a Spanish tax resident and you'll pay tax in Spain on worldwide assets and income. So we always say plan your move carefully. And on that basis, Shane, when would you recommend that someone starts talking to you if they're going to plan to move to Spain?
I think under that timetable, a year is ideal. If you don't have a year, 6 months is probably, your back's up against the wall at that point. So what the best case scenario is, you start planning a year to 6 months in advance. You have a conversation with us. We hear these types of situations every day. So we might know things and be thinking of things you haven't even thought of. We put you in touch with a lawyer on the Spanish side and also someone who specializes in immigration. So one of the biggest things is making sure you get on the correct visa for you. For example, if you're coming over and you could be on a digital nomad visa or anything else that gets on a special tax regime, you could be saving significant amount of money, especially if you should be on that visa anyway. If
Yeah.
there's minor structural changes you have to make to your business or to your lifestyle to get on a more favorable tax code, I think it's a really important thing to do. And it also affects things like wealth tax, inheritance, worldwide income, all those types of things are affected on the tax code. So I
Yeah.
think that, looking at the tax side of it, ideally 6 months to a year. And then in terms of, setting up your investment accounts the right way so they don't get frozen or worst case scenario, they close the account. I think that's probably a good timetable.
Yeah, no, thanks for that, Shane. So yeah, so in the firm, we act for clients buying, selling, inheriting property. We
Mhm.
do when they if they just own a property, then they've got to pay what's known as the non-residence income tax.
Mhm.
And then also we've got tax lawyers in the office and help with basically submitting individual personal tax returns. And we have also got a busy visa team. And you're right. So, the digital nomad visa, you can save a lot of money by coming over to Spain on the digital nomad visa.
Mhm.
That visa is basically, you know, you are usually employed or a company director. You're earning at least 30,000 euros. Your company's been in existence for more than 12 months, and you've had a business relationship with them for 3 months. So that's the kind of visas. And you're right; those visas can take 3 to 4 months to prepare.
Yeah.
And the longer time, the better. The other, very important point that actually applies to a lot of people, and I'm sure you've come across this, is if someone sells their main residence in the States and moves to Spain, if that kind of happens in the same tax year when they become a resident, as in they spend 183 days here, they could be charged capital gains tax on the sale of their US property. Have you come across that?
Absolutely. This is a situation where, we jokingly say we want to be financial planners. We don't want to be financial firefighters. So
Yeah.
if you move here, you get in touch with us and say, I've become a tax resident. I just sold my house. At that point, it's too late to really plan for the capital gains in Spain. So if you're a person in the US, you're planning on moving over here, we have an initial call. We work with a lawyer like you guys on the Spanish side. We work with a CPA on the US side. We look at your whole situation and we make a plan. So you have your primary residence in the US. You want to sell that before you become a tax resident in Spain, ideally, to avoid the capital gains in Spain. We have a lot more exemptions for the primary residence in the US. So in a lot of cases, you'd be paying nothing or very small amount of taxes on that property. If you, for whatever reason, you can't plan ahead on that and you get over here, you sell your house. My understanding is there's still options, but they're limited. If you buy a new primary residence within, I think, 18 months of moving, you're only going to be paying capital gains on a percentage of that. You can reinvest in a Spanish property, but it's always better to plan ahead if possible.
Yeah, you're absolutely right, Shane. So if you sell your US property in a different tax year to when you move to Spain, then you don't have to worry about it, and it is all about planning. So if you sold now, or in December, for example, you haven't got 183 days. You're not going to become a Spanish tax resident. You don't need to worry. You sell your property in January and move to Spain in March, then you've got an issue.
Yeah.
But it only applies really if you were over the age of 65 and it was your main residence for the last 3 years, then you're okay when you move over. But if you're not, then like you said, you've got to reinvest all the money's over, and you've got up to 2 years, 18 months to do that. So it is a real. I think that's one of the biggest calls so far that we've come across, and I agree with you. I like your comment about the firefighting. Now, you know, the American IRS. I mean, I had the pleasure of being in Vegas recently, and there's a mob museum there, and that's when you know, they were talking about when the IRS was set up, and it was basically because they were chasing the mob and getting people to pay their taxes. Times have moved on since then, Shane.
Yeah.
But the Americans always say, what taxes will I continue to have to pay in the US, even though I now live in Spain?
Yeah. Yeah. It's a good question. Let me just preface by saying we can't give tax advice. Um, but we need to focus on your situation, your specific situation. So if, for example, let's say you're a retired couple from the US, you move to Spain, you've lived there 180 days, you're in the typical Spanish tax regime. Typically, what happens then is you'll file your Spanish tax return in June, pay your taxes in Spain, get an extension for your US tax return until October 15th, and then file your US returns October 15th. At that point, you use either a foreign earned income exclusion for your US returns or a foreign tax credit. And that's essentially saying to the IRS, we pay taxes in Spain. We're using this credit to offset any taxes we owe in the US. Usually for sure, Spain, most of Europe, the taxes are higher than the US. So you're only going to be paying taxes in the country of residency, which would be Spain. Now, there's exceptions. So, for example, if you have a business in the US, like a C Corp, a real corporation, that's always going to be taxed in the US. If you have any US sourced income, which is confusing in and of itself, but something like property, if you have rental income from a property, that's most likely going to be taxed in the US. So there's a couple exceptions, but the general rule is you're going to be taxed on worldwide income in Spain, pay taxes on that in Spain, and then use a credit to offset that in the US.
That's great, Shane. So that's really important. So clients need to be aware that they won't be paying the tax twice, but if there's a higher rate here in Spain, then they would have to pay that here, but they
Mhm.
receive a credit for that in the US. And I agree with you. Generally speaking, yeah, taxes are slightly higher here than the US and, for example, the UK, where lots of our clients come from as well. Um, okay, that's fine. So would you introduce the clients, or would you liaise with their tax accountant to talk about those issues to just kind of make sure it gets done before? I mean, what do they have to do before they come to the Spain? Do they have to say goodbye to the IRS and hello to Spain?
That's a good question, Alex. It depends. Each state in the US has state tax, and some states are harder to break up with than other states. So if you're in California, for example, you have to formally kind of divorce the state tax authority. So you have to file a form or a letter that says, "Hey, I'm leaving California." In some cases, you have to pay any, backed taxes you would have. You have to show them that, in fact, you're no longer a tax resident. And it's the same for a lot of states. New York, I think I've heard similar in Massachusetts or Connecticut. So anytime there's a state tax, those states are going to be harder to leave than a state like Texas, Florida, more of the conservative kind of leaning states. So you have to do that typically as like step one. And then once you come over here, um, it's more of the process that we discussed. But
Okay.
I think it's important to work with tax professionals who understand the joint tax treaty, how it
Yeah.
all works together. So someone on the US side, someone on the Spanish side, and then we think of it depending on how complicated the situation is, we form like a little triangular team, financial advisor, tax advisor in Spain, tax advisor in the US to make sure everything is being done as it should be. We see ourselves as kind of like the general practitioner of the
Yeah.
financial world and make sure that, did you sell your house? How are the capital gains being treated on your company? Do you need to speak to your tax attorney here? Do you need to file a specific form for the US or for these accounts that you have? So we try to do that. And if it's a very complicated situation for more high net worth people, it's paramount. You have to make sure everybody's talking, everybody knows what's going on, and you're doing everything kind of as a unit.
Yeah. So you're starting that process, at least a year beforehand, which is quite some tax planning. But we have done that before, and you're right. So we had clients moving from um, from the UK, and they had assets in Dubai, and basically, yeah, we dealt well. They completed the rearrangement of those assets before they came to Spain. Let's just say that's what you've got to do. You've got to basically prepare your bags to go
Yeah.
to Spain. Yeah.
Yeah, exactly. Yeah, well said.
Okay. So what about wills? I mean, because Shane, we would always recommend a Spanish will for Spanish assets. And
Mhm.
then if you update your US will or your living trust, etc., that you exclude Spain because the Spanish will would suffice for that. Have you got any thoughts or comments on that?
We got comments. This is a little bit, outside of our area of expertise. For anything estate planning or inheritance, we always recommend speaking to a lawyer who understands that. So I'll just talk in general terms. Um, but I think it's very important to look at those type of estate planning situations as you get later in life and in general when you move over here. So one of the first steps is speak to an attorney, take your US will, have it notarized in Spain if you want to follow, excuse me, US law upon death. So that's kind of a step one. Speaking to the attorney is step two. And then there's probably a lot of structural things that you're going to want to do depending on which region you live in Spain. So different regions have very different laws regarding tax rates for inheritance tax and also gift tax. There could be some structuring to do ahead of time to optimize your tax situation. I know in the US, we have an estate tax on the person's estate, whereas over here you have an inheritance tax. So currently in the US, if you have an estate below, I think it's like 13 million US, you're going to have a reprieve on any estate tax. And then Over here, if someone were to inherit, that's going to be taxed at the individual level as someone inheriting. So they're kind of two different taxes that need to be treated differently and looked at both ways. A couple of things that always come up for us: if you're a U.S. person, U.S. spouse, you both fall under that 13 million estate tax kind of burden-free zone.
Yeah.
If you're one person from the US, one person from Spain, it might not be the same. So for US people, it's 13 million. For non-US people, it's 60,000 is the exemption. So there's a huge difference.
Well,
So we always advise speaking to an attorney to make sure that things are structured correctly and that everyone's aware, of the nuances of the cross-border aspect of inheriting money.
yeah. So when you talk about estate tax, right? So basically, yeah, we understand the estate tax to be, you value the assets, that's the value of the asset, and then any tax payable comes out of that value, yeah, and then
Mhm.
it's distributed amongst the heirs and beneficiaries, and that's very different to Spain because in Spain, whoever inherits pays the tax. So it's an
Yeah,
individual tax, whereas in the States it's an estate tax. Again,
yeah.
that's similar to that's the Anglo-Saxon legal system there. Yeah. Okay. So what about bank accounts? So would you recommend that an American holds onto their bank accounts in the States, or open new ones, close certain ones? Because I'm very aware that some banks don't, as soon as they leave the US, they sometimes they actually close them.
Mhm.
They don't like their kind of clients living abroad and having fun.
Yeah, exactly. Yeah, they want to end the party.
Yeah,
That's a big issue for us. A lot of issues arise from this Foreign Account Tax Compliance Act, FATCA, which came around in 2010, which was kind of an idea to end money laundering or hiding money abroad. So it's the idea that all tax authorities need to communicate with each other. So a Spanish tax authority, the IRS, they need to talk and say, hey, Alex has these accounts in Spain. If you were American, I mean, just just to be aware of these things. So because of that additional layer of compliance, a lot of banks don't want to work with expats. A lot of brokerage companies, custodians, they don't want to deal with US people. So that's one of the issues. People in the US, let's say you've banked with Wells Fargo your whole life, you move abroad, even before you move, if you tell usually your advisor or banker at Wells Fargo you're moving abroad, they don't know, they don't care. They say, yeah, it's great, no problem. But when they fill that form out of a change of address and put it through compliance, that's when it gets vetoed. They shut it down. They say we can't work with people living abroad. So that's usually what happens. And that happens with your brokerage accounts. It happens with your bank accounts. If you can maintain them, a bank account, always do that. It's harder to open them once you're abroad. If you cannot, there's options. One good option is a company called Wise. They used to be called TransferWise. It's a currency broker. You can hold US dollars and euros. You get an international bank account number, an IBAN for each. You get a SWIFT code, ACH, everything you need in the US. You can transfer money between the two, all through your phone. It's easy to do. Other options are the state federal credit union. It used to be for diplomats, people like that. Now you can become a member, join that, open up a US bank account, and then kind of maintain it that way.
that's interesting. And Shane, so for example, if someone's got US shares, can they still keep them, or are they? It depends on the brokerage company they're dealing with, and they may have to sell them.
Exactly. It's a great question. That's how a lot of people reach out to us, to be quite frank. When they get that letter that says we're closing your account, then it's the panic. They do a Google search, find us. And that's how a lot of our initial conversations are started. So really, there's only about two custodians who work with US expats. Charles Schwab in the US, a big bank, they have Charles Schwab Domestic and Charles Schwab International. Now, this is going to be a little bit boring, but it's important. So, Schwab Domestic, anyone in the US, Schwab International, anyone outside the US. After you go from that point, there's another layer. There's retail clients and institutional clients. If you just go into Schwab and create an account, you're a retail client. If you're a retail client, once you move abroad under Schwab International, you can't hold US mutual funds because they're not licensed where they're being sold. you can't hold US exchange traded funds because they don't produce this document that the European Union needs them to have. So there's a regulation called PRIPS, Packaged Retail Insurance and Investment Based Products. And that says you need to produce this fact sheet called the key information document in order to sell exchange traded funds in Europe, which shouldn't be a problem. But in the US, the Securities and Exchange Commission says you can't produce that document because in that document, you're forecasting or projecting returns, which they say is a big no-no. So you can't produce these documents then. So there's no way to offer these products. So that means as an American, you have to have an all stock portfolio on the equity and fixed income side, unless you're an institutional client. So if you're an institutional client of Schwab, meaning you work with a US registered investment advisor, then you can hold the US exchange traded funds. The other option is Interactive Brokers, which doesn't have that option, but you can still open an account because Schwab doesn't work in every country. So if you live in Italy, for example, your only option as a US person is Interactive Brokers.
Wow. Wow. God, that's I don't know, it seems very strange and drastic. You know, they're really they're taking the rug off the Americans who want to move to the States, yeah.
Absolutely,
To
yeah. I think,
to Europe, yeah.
yeah, I mean, it's been, years ago, everybody was in the EU, Goldman Sachs, Morgan Stanley, Merrill Lynch, all those companies. And then after FATCA, such a small percentage of their revenue, it didn't really make sense to maintain the license. The compliance is crazy compared to the US, all those types of things. It was just it wasn't cost effective. So they started shutting down offices and there's been no reverse. So everyone who used to be over here has just continued to shut offices until there's really only two people left.
Well, interesting, Shane. That's very interesting. Okay. Any further tips then for your fellow compatriots moving to Spain that we haven't covered?
Yeah, I would say, always work with professionals, make sure that they're licensed, make sure that they have a good track record. And then on like the tax and legal side, setting things up the right way, year one is very important. So speaking with someone like yourself, once they move, get on the right visa, file their taxes in Spain the right way. Because as you know, the Spanish system, you're basically just taking last year's tax returns, making a few updates, resubmitting. So if you get that wrong year one, your foundation is going to be messed up every subsequent year going forward. And the same thing for the US. Make sure that first year you speak with the CPA who understands the joint tax treaty. In a lot of cases, whether you use the foreign earned income exclusion versus the foreign tax credit can make a huge difference in how you can save money tax-free in the US. So making sure that you have these conversations, you speak to someone like us, you make sure that you understand how it affects your investment accounts, how you account for currency risk. If all of your money is in US dollars and then all of your expenses are in euros, that's a big risk if something happens to the dollar. So we need to account for that, or at least have a plan for it. So I think plan ahead, don't get freaked out. It's a lot of changes, but it's all good things. And speak to people who know what they're doing.
Yeah. And how long have you been in Seville now, Shane?
I've been here 7 years. I've been an expat for 16 years. So I've lived in a couple different countries in Europe and seen different nuances in the tax situation for Americans and lived it myself. But Spain's great. It's a great country, really nice place to live, as I'm sure you would agree.
Yeah, definitely, definitely. I had the pleasure of being invited to the Ferry de Seville in April this year, which is very hot,
Nice.
but great fun. And
Yeah,
yeah,
yeah.
the tapas trail in Seville is amazing. So yeah, it's a hot spot for Americans. But listen, and for international tourists generally. But listen, Shane, we'll put your contact details on the video so people can contact you. And
Okay.
then, but yeah, really appreciate you talking to me today, and thank you very much.
Yeah, thank you as well. I enjoyed it. I think like you said at the beginning, there's a lot of demand right now for this. So as long as everybody stays, calm and speaks to the right people, there's nothing to worry about. It's going to be an adventure. Thanks again, Alex.
Thank you. Thank you.